It shouldn't really be a surprise, Soren, that the coronavirus has impacted your outlook. Can you tell us how severe it's going to be?
Well, I think a lot will depend on what happens with the virus right now in the next few weeks. What we are looking at right now is over the last 2.5 weeks, we've seen a steady decline in the number of new cases registered every day. That's positive. It means that we could very well be set for a peak in the absolute number of affected within the next 2 weeks. If that were to be the case, then we would expect a very weak February, weak March, and then a rebound in April, May, a sharp rebound in April, May. But there's still a lot of uncertainties out there, and what happens when all the migrant workers are returning.
Is trade picking up elsewhere as you see this drop in China?
Yeah, we've actually seen a remarkable pickup in trade out of Europe. And obviously many companies are trying to restructure their supply chains. It is very difficult, though. China's impact on global supply chains is much bigger today than it was during the SARS crisis many years ago, especially for factories in Southeast Asia, where lots of the raw materials and parts are coming out of China. So the coronavirus is not just impacting the exports of finished goods from China, it's also impacting the export of parts and therefore also export of finished goods from Southeast Asia.
Would you consider removing capacity from China, or do you expect the rebound to be significant enough that you need to leave everything in place?
So we have actually canceled many, more than 50 departures from China in the last 2 weeks. We usually have quite a cancellation program immediately after Chinese New Year, because it does take a few weeks for manufacturing to ramp up again. But obviously this year China has been closed for twice as long, and we are also seeing much slower ramp up because workers that are returning to their cities are put in a 2-week quarantine before they can start work. So things are just ramping up much slower, and we're canceling sailings as a result.
How is this affecting container rates, Soren?
Well, container rates, they have quite a traditional seasonal pattern, and they will increase up to Chinese New Year, which they also did, and then they will decrease afterwards. And so we're seeing the natural pattern, nothing more than that. I believe the carriers across the board have done what we have done in terms of canceling sailings, and that has meant that we can keep the normal pattern on freight rates.
Away from the coronavirus, the entire industry is shipping to or switching to a low-sulfur fuel under new regulations. That's caused the prices to spike as far as we can see. Do you expect that to translate into higher costs for the client, or do you have to eat those costs?
So first of all, let me say, Matt, that we believe that moving to low-sulfur fuel is a very positive thing, because it means that we will definitely be polluting a lot less. But it is a more costly fuel, and we are mitigating that both on the cost side, doing whatever we can to mitigate the cost, but also by passing on higher costs to our customers. And so far, we're moving in line with the plans that we have.
Do you still see volatility continuing for the fuel prices? How do you see that market shaking out?
So we had lots of volatility just around New Year in January, when this came into effect. Prices have come down a lot. They're still higher than the high sulfur fuel that we used to burn, but the volatility has come down quite a lot, and we hope that we are moving towards a more steady state on the new fuel prices.
Soren, you have been, we've talked often in the past, and you have always been a proponent of moving towards a greener fuel. You're looking to do what you can at Moller-Maersk to fight climate change as well as possible. How do you see, from a long-term view, how do you see that affecting your business? For example, as automakers shift to electric cars, one example that pops up in my head, they're going to need far fewer parts and going to need maybe to ship even less.
Mm-hmm. Yeah, possibly. I think for our industry, we in AP Moller-Maersk, we articulated a target to become net zero CO2 by 2050 already in 2018. We have spent a significant amount of effort on working on that agenda. We believe that it looks like the solution for our industry could be to move to an alternative fuel such as alcohols or ammonia or biomethane, all of them being fuels that can be produced with a sustainable energy as the original or the starting point. And once we can define what kind of fuel the future we should use in the future, we can also, being a globally regulated industry, we can also regulate that we have to use the fuel even if it's more expensive, as we have just done with the low sulfur fuels. You've just come off a huge consolidation wave in the industry. You participated buying Hamburg Süd. When do you see the next wave? I mean, do you expect excess capacity to lead to more consolidation in the future? I would assume that we would expect that our industry will have probably one more round of consolidation to work through. At AP Moller-Maersk, we have, if you will, as you just mentioned, we have done our part. We don't have a strategic imperative to do more consolidation on the ocean side. We have just under 20% global market share, and that means that we have the scale to be competitive for many years to come. Our focus is on growing our landside businesses, both in our ports business and our landside logistics businesses, and offer a more end-to-end solution to our customers.